Welcome to Street Finance, your favorite channel for money and finance matters. We are excited to have you back here. Please do us a favor and click the like button, and also share the video to your friends, and do not forget to subscribe. We truly count on your support. Thank you. Now let's dive into today's topic. You've probably heard about Warren Buffett. Who hasn't? The Oracle of Omaha is undoubtedly one of the greatest investors of all time, and his stock market tips are among the most sought-after advice around. In this video, we will explore his best stock investment advice and how they could also be applied to crypto investment. When it comes to investing, there are two primary options: stocks and crypto. These two assets have a lot of similarities, which makes them a natural fit for an investment. That being said, they are not the same and not suitable for everyone. Some people prefer investing in stocks only, others prefer investing in crypto, while some people invest in both. Before proceeding to the main topic, let's review the key similarities between investing in stocks and investing in crypto. For starters, let's look at the basics of stocks and cryptocurrency and refresh our knowledge of these investment instruments for those of us that are not already very conversant with them. What is a stock investment? In the stock market, investors buy shares of a company, whether publicly traded or privately owned. They can choose among a variety of stocks and make an investment based on their analysis of the company's financial performance, future prospects, and possible growth. The reason for investing in these companies is to generate a return on the initial investment. As time passes, the share price of a company tends to increase or decrease based on its performance. If you buy stocks at $100 and sell them at $110, you'll earn a 10% increase. What is a crypto investment? Crypto is a digital asset that can either be exchanged for other cryptocurrencies, or exchanged for fiat money, such as USD, euros, and so on, or other crypto assets. A person who holds crypto assets owns the asset itself, similar to how you hold USD in an actual wallet. Investors trade crypto assets to generate returns based on their analysis of the asset's performance and future prospects. Crypto is a decentralized asset, and the value of a crypto is determined by the market. Some of the most popular cryptocurrencies include Bitcoin, Ethereum, Tether, USD Coin, Binance Coin, XRP, Cardano, Binance USD, Solana, Polkadot, Dogecoin, Avalanche, and many others. Now, how are stocks and crypto similar? When it comes to the similarities between stocks and crypto, you'd be surprised at the number of factors that these two investments have in common. Just like stocks, investors who pick the right crypto can make money. To put it in simple terms, investing in crypto is similar to investing in stocks. In both investments, you'll need to understand the difference between short-term and long-term trading, and also have an eye on market risks. With that, let's move on and find out how they work and what your options are when it comes to investing in one or the other. Investing in stocks has always been a popular way to earn money, but there are some investors who outdo the rest. They can accurately determine the value of a company, and they have the resources to buy and sell the right stocks at the right time. This can make them very wealthy, if they succeed. A typical example of such investor is Warren Buffett. As you know, Warren Buffett, the Oracle of Omaha, is one of the richest stock investors who ever lived. He said that the single most important investment decision one can make is to decide what stock to buy. An investor who picks the right stocks and holds them for the long term can see significant returns. Like stocks, the same applies for investing in crypto. You'll need to have an in-depth knowledge of the market, investing in the long term, and having a clear exit plan. There are money managers who manage billions of dollars and make the markets move. They are the brains behind the entire trading process. You can use them as a benchmark for your own investment decisions. There are investors who can pick the right coins, analyze their returns, and exit their positions when the time comes. These are the greatest crypto investors. They can make you money with minimal effort and can yield good ROI. Having reviewed these basics of stock and crypto investment, let's see how Warren Buffett's stock investment advice can be applied to crypto too. Yes, we all know that Warren Buffett has no interest in crypto at all, but his investing principles has been found very useful in all fields of investment, including crypto. Now let's dive into these fundamental principles that he uses in his investment decisions. Number 1. Know what you're investing in. Buffett is one of the most famous investors of our time because he has consistently been able to outperform the stock market over the long term. However, he has also been very consistent in the way he does it. He does not have any special analytical skills or tools that enable him to predict the future. Instead, he focuses on two core principles that have made him a billionaire. First, he focuses on investing in proven companies with strong fundamentals. This approach has proven to be extremely successful because it eliminates most of the risk associated with investing by reducing the potential loss. If a stock does not have a proven track record, it has the potential to lose money regardless of how good the fundamentals look. When the market is going through an economic downturn, many investors tend to panic. This leads them to invest more money in specific sectors, which significantly increases the risk. The takeaway from this would be to know the crypto you are investing in, to do a detailed background check and gather all information available on the particular cryptocurrency that you are interested in, before taking that investment decision. Invest in proven crypto with strong fundamentals. Research the developers and the people behind it. If a cryptocurrency does not have a proven track record, it has the potential to lose money regardless of how good the fundamentals look. Number 2. Diversification is important. Buffett has advised investors to diversify their portfolios. This is because an average investor can only invest a small portion of their money in the market because of the high risk. A small amount of money invested in a large number of stocks does not increase the potential for large profits but does decrease the potential for large losses. Diversification is not about spreading your money around in a handful of different industries. Instead, it is about spreading your money out across a large number of different stocks within the same industry. Moreover, the more diversified your portfolio is, the more likely it is to stay intact during bad times. You can do this by investing in individual funds or by spreading your money across different segments of different industries. How do we apply this advice in crypto? It goes without saying that diversification is very crucial in crypto investing as well. Diversification reduces risk and creates stability. So, it is wiser to spread out one's investment across many different cryptocurrencies instead of pouring all our funds into one type of crypto. Instead of investing 100% of your investment funds in one cryptocurrency, it is wiser to invest, for instance, 10% of the funds to each of 10 different well-researched cryptocurrency. Number 3. Patience is a virtue. Buffett has advised investors not to make quick decisions. You might think that if you make a wrong decision, you can correct it later. However, this is not always the case. The markets are extremely unpredictable, and by the time you notice your mistake, it might be too late to change your decision. When you invest, you should place your money in the right hands. Unfortunately, this is not the case for most investors. Many people like the idea of investing money themselves but do not have the time or skills necessary. This has proven to be extremely risky. What can we take away from this advice? Crypto market is also unpredictable. Patience is key when monitoring and studying a crypto you are interested in. Do not rush into a new currency because it is trending and everyone thinks it's the next big thing. Do not take rash decisions. Number 4. Don't just rely on the advice of others. You might think that every tip that comes out of the mouth of renowned investors is worth following, but you'd be wrong. Warren Buffett himself is one of the greatest investors of all time, but according to him, he is not a professional investor. Instead, he is a billionaire who has made a lot of money by investing in the stock market. Buffett's advice is not investment advice, so you have to make sure that you review every advice and decide what is best for yourself. Investing is a complex and difficult process because it requires a large number of skills and tools. However, you don't have to become a master of all of them to reap the benefits. You can carefully follow the investment advice of others and use their help to determine the best and most efficient way to invest your money. By relying on their advice, you can reduce the risk of making a mistake that could affect your entire portfolio. When it comes to crypto, this is exactly the same. The ball stops in your court. The final decision on any investment should be yours and not dictated by another person. Number 5. Confidence in your investment is key. Buffett has been investing in the stock market for many years, which means that he knows a thing or two about investor psychology. One of the most common mistakes that investors make is overconfidence. They think that they know more than they really do and place too much confidence in their investment decisions. You can avoid this mistake by relying on your own research and analysis. If you believe that an investment is a good one, then you have nothing to lose by trying it out. However, if you think that it is not a good investment, then there is no risk in ignoring it. The same can be applied to investing in crypto. You can invest with confidence after doing your own research and analysis. If you believe that a cryptocurrency is a good one, then you have nothing to lose by trying it out. However, if you think that it is not a good investment, then there is no risk in ignoring it. Number 6. Don't be afraid to lose some money. Many investors are afraid to lose a small amount of money. They tend to be angry and mad at themselves when they lose a few dollars. However, this is completely wrong. You should not be mad at yourself when you lose money. Instead, you should evaluate what went wrong and what you could do differently next time. When you invest money, you should not be afraid to lose a small amount of it. If an investment does not work out, then it is not the end of the world. You have enough money to invest in a few more that might work out. Number 7. Stay away from leverage and shorting. Buffett has invested his money in many different companies. However, he has not invested any in the stock market with leverage or shorting. This means that his investment is 100% based on his own money. Buffett does not use leverage because there is a chance that he will lose all his money if the companies he invests in go bankrupt. He does not short stocks because this is very risky. If a company fails to deliver on its promises, then the value of the shares goes down, which means that he will lose a lot of money. We need to be careful of these same issues when investing in crypto. Do not invest more than you can afford to lose. In conclusion, overall, Buffett's best stock investment advice is to understand your investment, diversify your portfolio, stay patient, don't be afraid to lose a little money, and don't be afraid to look at different investments. These tips help investors to reduce the risk and improve the likelihood of reaping the benefits of investing in the stock market. Likewise, as a crypto investor, you should understand your investment, diversify your portfolio, stay patient. Don't be afraid to lose a little money, and don't hesitate to look at different investments when necessary. By doing these, you reduce risk and boost the returns you can get from your crypto investments. This brings us to the end of our topic. Are you a crypto investor? Which of the cryptocurrencies have you invested in? Do not forget to click the like button, leave your comments below and subscribe to the channel to join the community for more interesting finance contents like this. Thanks for watching and see you on the next one.